Dear colleagues, dear guests, we are pleased to welcome you at our webinar. Many thanks for joining to us tonight or today. So basically, we would like to quickly introduce ourselves and explain the main topic and the idea behind this webinar. So we are Antitrust Regulatory Practice of Seamless Legal Law Firm, and we have also invited our partner, German lawyer, Dr. Thomas Heidemann, with whom we handled a lot of transactions related to the topic of this webinar, and who kindly agreed to join and will provide very interesting and valuable insight from the EU perspective. Basically, the idea of this webinar is the following. A few weeks ago, we made a similar webinar on a similar topic for a Russian-speaking audience, and it was very well received. We received really positive feedback and multiple requests to make a similar seminar for international audience in English. So we are happy to comply with this request. We have updated our webinar, and basically we'll cover all the topics. And this webinar is mainly about the so-called Russian counter-sanctions regulations implemented since 2022, but not only, because in fact the relevant approvals are not limited to the counter-sanctions regime, and we will quickly see what it is about. So the purpose of this webinar is just to explain you how it works in the current environment and emphasize some existing trends. Basically, the first topic will relate to the approvals required for the Russian M&A transactions and certain other operations that were introduced since 2022 and which are linked with parties from the so-called unfriendly jurisdictions. So, since 2022, after certain geopolitical events, the Russian government approved the list of the so-called unfriendly jurisdictions, which includes all the EU member states, the US, Canada, the Republic of Korea, and Japan, and certain other jurisdictions. And nowadays, since 2022, any transactions with shares in Russian entities and certain other transactions with parties from the said unfriendly jurisdictions are subject to specific approvals. So here on this slide, you can see the main categories of the transactions caught by this regulation. And we have to emphasize that there are no thresholds, either in terms of the turnover or in terms of the percentage of shares. And basically, the only criteria triggering the clearance is that one of the parties, directly or indirectly, is a person from an unfriendly jurisdiction. Here we see the exit transactions, means the transactions aimed at exit from the Russian market of investors from the unfriendly jurisdictions. These basically cover sale of Russian assets to third parties, also the sale or transfer of such shares to the management of Russian entities, and sometimes voluntary liquidation of Russian companies. In addition to that, intra-group transactions between parties linked with unfriendly jurisdictions are also caught, but as you will see, they are subject to a more lax regulation. And finally, and this is also important, that not only M&A transactions are caught, but also cross-border transfers of funds, mainly transfers of funds out of Russia towards unfriendly jurisdictions and in certain cases other foreign jurisdictions. Here we speak about the payment of dividends to unfriendly shareholders and repayment of loans to unfriendly creditors. And finally, the counter-sanctions regulations also cover transactions with real estate assets located in Russia and owned by unfriendly jurisdiction, by unfriendly investors, and also IP assets as well as securities. As of today, as we have just said, any transactions with such assets are subject to specific clearance procedure introduced by the counter-sanctions regulations. A specific body was appointed in 2022 to review such transactions. This is the so-called subcommittee at the Governmental Commission in charge of supervision over foreign investments in Russia. And this specific body is headed by the Russian Minister of Finance. And this body was created in 2022 exactly to review and approve exit transactions. On this slide, you will see the most important conditions that are imposed on such transactions. First, we have to note, speaking about the current trends, that compared to the boom of 2022, beginning 2023, the number of such transactions has to a certain extent decreased, or we can say stabilized. But still, the workflow, if we can put it this way, is quite significant. To get such a transaction approved, as a general rule, the parties, usually this burden is imposed on the buyer, has to pay a voluntary contribution, as this term is defined by the Russian regulation, or the exit fee, which amounts to 35% of the market value of the relevant Russian assets disposed of by the exiting investor. And this market value is defined by independent appraiser, and we will discuss about this in more detail on next slides. Furthermore, to get the transaction approved, usually the Governmental Commission impose certain key performance indicators to be complied with by the disposed of company. It means that the acquirer undertakes to ensure that the company will maintain the business at a certain level, keep a certain number of headcounts, generate a certain amount of turnover, and pay to the Russian budget a certain amount of taxes. Besides, the purchase price of such assets may not exceed 40% of the market value of such asset. It means that a 60% discount is imposed. Finally, it is important to say that even if liquidation does not result in sale of any shares or assets, it is also formally caught by the counter-sanctions regulations, but in the meantime, as suggests our experience, no exit fee is levied. Besides the exit transactions, intragroup transactions involving transfer of shares by investors or by the existing shareholders from unfriendly jurisdictions to other group companies is also caught and also trigger clearance. However, such transactions are not viewed as exit ones, and the attitude of the regulator towards such transaction is more lax. In addition to that, there is a specific regulation which implies that no valuation report is required towards such assets, no exit fees is levied, and there are no KPIs to be complied with, since the transaction is not viewed as an exit. So there is no need to provide commitments for the maintenance of business at a certain level. We have dealt on multiple occasions with such transactions, and we can confirm that on the one hand, such transactions are usually approved without specific difficulties by the regulator, but on the other hand, the process is still lengthy and there is still a large room for discretion for the regulator. Here, on this slide, we focus on certain practical aspects related to the exit transactions. First, we have to say that in practice, the relevant applications for the approval of such transactions are filed to the Governmental Commission via the so-called line ministry, which means the ministry responsible for supervision of the relevant industry or area where the target disposed of is active. And our experience suggests that each ministry or even the different departments within the same ministry may have their own views and approaches in relation to KPIs and other requirements imposed on the targets in relation to such transactions. In addition to that, certain departments within certain ministries impose additional requirements. For instance, we encountered situations when a department within a ministry insisted on, that the target company should implement localizations measures, means production of its goods in Russia, and it was imposed even in relation to merely distribution companies that had not any production at all, and which, let's say, made the overall process very complex. Finally, as regards practical considerations, we have to say that initially parties sought to implement option arrangements in their share purchase agreements with a view to buy back the assets after a certain period of time. The attitude of the regulator was always not really positive about such arrangements, and currently they are not supported at all. So a transaction implying option arrangements has very few chances to succeed. Then, as mentioned earlier, one of the prerequisites or one of the integral part of the filing is a valuation report prepared by an independent appraiser with the market share of with the market value of the share in Russian companies disposed of. This valuation report is essentially needed to define the amount of the exit tax and of the discount. And not all the valuation companies are admitted to assess targets under the regulatory clearance proceeding. Thus, there is a short list of appraisers approved by the Russian Ministry of Finance, and only appraisers from such a short list are admitted to assess shares in the Russian assets disposed of. This list is reviewed on a frequent basis, and currently the latest revision is dated August of this year, and there are only 23 valuation companies admitted to assess shares in Russian targets. And it's also important to note that the validity of a valuation report is not unlimited. Far from that. The maximum period of validity of such a report is of 9 months, basically. And since the review process can take longer, it's a frequent practice that case handlers from relevant ministries require to provide new valuation reports, and we encountered situations where parties to transactions were required to provide such updated reports 2 or even 3 times. In addition to that, we have to attract your attention to specific issues that may make the review process very complex or even result in rejection of the application. Thus, if the target has intragroup debts, and if such debts are not settled, or if no settlement plan is provided, then the ministry will most likely reject the transaction, will not support it. It's the same relates to the account payables. If the company, if the target company has serious debts and does not have resources to repay such debts, then the ministry will not be interested in supporting such a transaction, because the company will just go bankrupt. And it's a mean, according to the ministry, for the selling investor just to get rid of such assets with huge debts. And finally, all ongoing litigations should also be terminated. Otherwise, the ministry will not support the application for the same reasons, basically. It can be viewed as a way to get rid of an asset which has serious risks. And finally, it's also a recent trend. In accordance with the applicable regulations, there is a so-called Type C account where, under certain conditions, the purchase price should be credited in relation to such exit transactions. And we see that recently almost all the transactions approved provides for payment of the purchase price to such a Type C account. And my colleague Elena will explain in more detail about this type of account.
Yeah, basically, as mentioned by Maxim, and as recent trends demonstrate that more active usage of the Type C account in the decisions of the Governmental Commission, I would like to explain briefly what is the Type C account. The Type C account is a special type of account, of a bank account, that is opened in the name of the foreign creditor by the Russian debtor in one of the Russian banks. So the idea is that the Russian company that owns the payments to the foreign creditor or foreign shareholder, if we're talking about dividends, applies to the Russian bank for the opening of this type account. The foreign creditor does not formally participate in this application process, and the bank account is opened without its participation. When the bank account is opened, the Russian debtor is entitled to make the payment to this Type C account, and from the Russian law perspective, such payment will be viewed and qualify as proper fulfillment of the payment obligations towards the foreign creditor. The applicable Russian regulations list a number of operations when the funds may be credited to the Type C account, and these are basically the operations and the payments that are provided by the Russian counter-sanction regulations, and also the payments under the transactions that are approved by the Commission, but subject to the payments to be made to the Type C account. Most importantly, the regulations also provide for a limited list of operations when the funds from the Type C account may be used. For instance, for the non-residents, meaning for the foreign creditors, the list of such operations is limited to the payment of taxes, to the payment in Russia, to the payment of the banking commission to the banks that operates this account, and very, very limited list of operations set forth by the Russian counter-sanctions regulations. Here, we have to say that rather recently, the list of such allowed operations has been slightly extended, and now it includes the possibility for the foreign shareholder to receive the dividends on the Type C account and to further use these dividends, this amount paid as a dividends, for the purpose of making payments to the Russian companies under the commercial agreements, for instance, in Russia. But still, the possibility for using these funds for making these payments is subject to prior approval by the Commission. So actually, although we do have these changes, these amendments in the list of allowed transactions, still in practice it does not help much, as still the Commission will be required. And in practice, for the moment, when we are talking about the Type C account, we are still considering that the money transferred to this Type C account are effectively frozen in Russia.
Before we move to the next section, please be aware that if you have any questions, please feel free to forward it to us through the chat, and we will do our best to address as many of them as we can during the Q&A session after the end of this presentation. And now we go to section 2, where we basically will discuss about operations that are not M&A transactions, but which are still caught by the Russian counter-sanctions regulations. And basically, it is all about payment of dividends by Russian companies to their shareholders from unfriendly jurisdictions, and also the repayment of loans by the Russian companies to, let's say, lenders from unfriendly jurisdictions. And here, the main goal and the main reasoning behind this regulation is to limit the money flow, especially in foreign currency, out of Russia. Therefore, the relevant regulations provide for restrictions for such transfer. And basically, Russian companies are allowed to pay to unfriendly shareholders or creditors an amount in form of dividends or loans or both, not exceeding 10 million rubles per month for all restricted payments. So it means that the overall amount may not exceed this sum. In addition to that, it is possible to pay higher amounts, but this will imply either payment to the C-type account, where the money will be basically frozen, or for paying extra amounts without crediting it to a C-type account, it is necessary to apply for clearance either to the Government Commission or to the Russian Central Bank, depending on the industry where the payer is active. And as regards the payment of dividends, here in the middle of this slide, you can find the list of criteria to be taken into account for, let's say, for assessing the chances for approval of the request by the Commission or by the Russian Central Bank. So first, the amount of such dividends may not exceed 50% of the net profit of the payer for the previous financial year. Second criteria is that the foreign shareholder of such payer should continue active on the Russian market. It means that the Russian subsidiaries should remain active and carry out its business. Finally, specific quarterly KPI may be imposed by the regulator, and it will be necessary to report and confirm to the relevant line ministry that such KPIs, both in terms of turnover, headcounts, taxes, or whatever, are complied with. And finally, what is also of importance is the history of payment of dividends in the past. It means that if the company used to pay dividends in the past, especially before 2022, this is viewed as a positive sign. It means that the company has always paid dividends, so why should it be restricted now? But if a company just starts paying dividends only now, it will be viewed as a strange sign, if I may say this way, by the regulator, and this will reduce the chances for approval. And there is one more important point to be taken into account, and Elena will comment on it.
Yeah, here I would also like to emphasize that not only cash payments or actual transfer of funds as dividends or as loans out of Russia are subject to restrictions and limitations. Such operations as set-off, for instance, when there are cross obligations between the parties and they intend to offset these obligations, such operations would also be subject to clearance in Russia if one of the payment obligations being subject to offset is a restricted one. For instance, if you have a Russian entity that has a debt under the loan towards the foreign unfriendly creditor, and at the same time this entity has a debt receivable against this same foreign company under the commercial agreement, the parties may offset their counterclaims, their cross obligations, but as one of the obligations is the loan repayment, which is subject to the restrictions by the counter-sanction regulations, this means that even for the set-off, you will need to obtain the respective clearance from the Commission or the central bank if we're talking about financial organizations. So even in the absence of actual transfer of funds out of Russia, the obligation to obtain the approval, the clearance from the Commission still exists. However, here we have to say that we do have a positive experience in obtaining such clearances for offset operations, as in the absence of actual transfer of funds out of Russia, the Russian authorities are better disposed to approve such type of transactions. Yeah, and getting back to the situation with the dividend payments and taking into account that, as Maxim mentioned, it might be rather challenging to obtain the Commission clearance for payment of the dividends in cash, meaning transfer funds out of Russia, we note, based on our experience, that many companies decide to proceed with the distribution and payment of dividends within the 10 million ruble threshold provided by the counter-sanction regulations. Here on this slide, based on the example of limited liability company, we demonstrate how it is formally possible under the applicable regulation to manage to pay the dividends in the amount of up to 10 million ruble per month. Thus, if we take into account the corporate legislation and the corporate regulation, we have to say that under the corporate law, the Russian LLC company is entitled to declare dividends for payment on a quarterly basis. So meaning that during the year, the company may decide on the distribution of dividends 4 times. Further, the law under the law, the dividend should be paid within 60 calendar days following the date of the resolution, when the resolution on the payment of dividends is made. So the law does not prohibit payment of dividends by installments, and this is usually done in practice. The company decides on the distribution of dividends on a quarterly basis. In each quarter resolution, the company distributes 30 million rubles of dividends, provided that they are paid by installments in the amount not exceeding 10 million rubles per month. And in terms of timing, you can see on the chart, if, for instance, the respective resolution is made in the middle of the month, there will be a possibility to manage to make the 3 payments of 10 million rubles before the expiration of the 30 days period, in a way that each payment is made in a different calendar month. Here, however, we have to mention that although the scheme is fully in line with the applicable regulations, we know, based on our experience, that some of the Russian banks recently expressed the opinion that 10 million ruble threshold should apply not to the amount of the monthly payments, but to the total amount of the dividends that may be distributed based on the one single resolution of the shareholder. In other words, according to this specific position and specific approach, the company may distribute dividends in the amount only of 10 million rubles per quarter. To address this concern, we approached the Russian Central Bank, who is the competent authority to clarify the respective provisions of the Russian counter-sanction regulations, with a formal request for clarification, and we received a rather positive feedback from their end, and a formal confirmation that 10 million ruble threshold applies to the monthly payments and not to the total amount of the dividends that may be distributed in one resolution of the shareholders. So at least for now, this specific issue has been settled, but however, we have to know that the overall trend consists in the fact that the Russian authorities and the Russian banks that process the cross-border payments, that they are becoming more and more cautious and conservative to the application of the Russian counter-sanction measures.
Yes, and in this respect, we would like also to emphasize a few following practical issues. First, it's important to note that 10 million rubles is a gross amount. It includes taxes, for instance, the withholding tax. So basically, the net amount is lower. Second, the banks, as Elena has just said, stick to a conservative approach and tend to reject and scrutinize the relevant payments. And this is applicable not only to Russian banks, but also to the banks of the recipients of funds abroad. Currently, let's say, accepting a non-Russian bank to accept receiving funds from Russia is not such an easy task. So payments may be rejected and sent back. And we encountered such examples in practice on quite a frequent basis. Since, as Elena has just mentioned, in accordance with the corporate law requirements, it is necessary to comply with the 60 calendar days deadline, it is strongly recommended to approach and discuss with Russian banks sending the funds in advance that they will accept processing such payments, that they are fine with all the documents, and that everything is prepared in advance and is on good track. Otherwise, banks may easily put on hold the transfers, and this can jeopardize the overall setup, and the distribution of dividends will not be performed in accordance with the initial plan, and it may be even necessary to cancel it and to restart from scratch. And one more point, also in line with the previous one, is that the banks always err on the side of caution. They do not want to take any risks, and they are aware of a number of high-profile cases when Russian payers artificially split their operations into several smaller ones just to comply with the 10 million rubles monthly threshold requirement, and such operations were uncovered by regulators, and judgments were made which were not in favor of the companies concerned. So this is also an important practical point.
And finally, speaking about the dividends payment, we would like also to highlight that despite the fact that formally the Russian counter-sanctions restrictions apply to the payments towards the unfriendly creditors or shareholders, in practice, other shareholders or other creditors from, let's call them friendly or neutral jurisdictions, may also be affected in practice by the existing restrictions. The key practical issue here is that in most instances, in order to proceed with the payments, it's necessary to demonstrate to the bank the full chain of shareholders up to the final beneficiaries of the recipient of the fund. So the bank needs to clearly identify who are the final beneficiaries, whether they are unfriendly or friendly. And this relates to the both situation as demonstrated on the slide, where there are no unfriendly shareholders in the corporate structure, and when there is an unfriendly shareholder, unfriendly jurisdiction at a certain level, but ultimately it is controlled by the friendly shareholders and friendly beneficiaries. Under both scenarios, and we face it based on our experience in practice, we may face situations when the banks request additional information and additional justification in relation to the identity of the beneficiaries. Of course, in the situation when there is no unfriendly element involved in the corporate chain, such case is likely to be easier to prove and to resolve with the bank, but still such additional complications under both scenarios should be taken into account while planning, for instance, certain transfer of funds and payment operations.
So now we go to the next section where we'll discuss about other types of clearances than the clearance provided under the counter-sanctions regulations. So basically, these are classical kinds of FDI, merger, and other types of clearances that existed for several years and which are not linked with the political events of 2022. So basically, the strategic clearance, FDI clearance, merger clearance, and specific clearance from the Russian Central Bank for financial organizations.
Yeah, basically, we will not discuss in details each specific type of this additional clearance that exists under the Russian law. Our aim would be to provide you with some key features that may trigger respective clearance requirements so that you can take them into account while planning certain operation and M&A transactions. So first one is the strategic clearance. Strategic clearance may be triggered in relation to the transaction aimed at acquisition by the foreign investor of shares or rights over the Russian strategic entities. Here, it is important to emphasize that this clearance applies formally to all foreign investors, and unfriendly or friendly element is not relevant, is not a qualifying factor, as this type of clearance exists under the Russian regulations since 2008, so long before the counter-sanction measures. Under the strategic clearance procedure, the transaction is reviewed by and approved by the Governmental Commission that is presided by the Russian Prime Minister. So it's a kind of higher level authority compared to the subcommission that deals with the counter-sanction clearances under the counter-sanction regulations. The whole process is coordinated by the Russian Competition Authority, the FAS. The key criteria for the strategic clearance is the definition of the foreign investor and the definition of the strategic activities. And here, when we are talking about the recent trends in this area as well, we have to say that both these criteria and both these definitions become subject to more and more broader interpretation. Thus, foreign investors these are not only foreign entities, entities controlled by foreign citizens or foreign states. The definition of the foreign investor also includes the Russian citizens in the situation, for instance, when the Russian citizen has another citizenship or even a residence permit in another state. So such citizens, Russian citizens, will be also viewed as foreign investors for the purpose of the strategic clearance. And the definition of the strategic activities, so the Russian target company should be involved in the strategic activities in order for this clearance to be triggered. And here also the trend is to broader interpretation, because initially such specific type of activities were exhaustively listed in the law, and usually these are the activities that are subject to special licenses, such as nuclear activities, use of subsoil in certain areas. However, the recent experience and the recent trends shows that even if the company may not have a license for the strategic activities, may be involved in the operations like supporting or ancillary services to the strategic sector, such company can also be viewed as a strategic, meaning that the additional clearances will be required if transaction relates to such company. Apart from strategic clearance, we also have a specific FDI clearance or foreign investment clearance provided by the Russian foreign investment law. The procedure is substantially the same as for strategic clearance that we just discussed. Initially, this clearance has been introduced for the transactions that involve acquisition by the foreign investors controlled by foreign states of shares or assets in the Russian entities. However, the approach has also been slightly changed, and the FDI regulations have been amended, and now the Russian Prime Minister is entitled to decide at his own discretion that any other transaction by the foreign investors towards the Russian entities for acquisition of shares in the Russian entities may be subject to such additional FDI clearance. Furthermore, there is a list of criteria that if the Russian company, the Russian target company meets certain criteria, for instance, if the company is a dominant entity on the market, then in such situations, the Russian authorities that review the transaction, for instance, under the merger clearance procedure, they are obliged to inform the Russian Prime Minister about such transaction, and then the Russian Prime Minister decides whether to apply his special authorities to submit the transaction to the FDI clearance in addition. For the moment, this clearance is still rather exceptional, but in any case, we have to take it into account, including in terms of timing when we are planning certain transaction. Also, the standard merger clearance still exists under the Russian law. This is standard clearance to be granted by the Russian competition authorities. Here, there are general financial thresholds as provided on the slide that apply in order to identify the necessity of the merger clearance in Russia. These thresholds are based on the amount of the assets of the acquirer and its group, the amount of the sales proceeds of the acquirer and its group, together with the assets of the target group, and sometimes the price, the transaction price, may also be a qualifying factor for the Russian merger clearance to apply. If we are talking about the trends in the area of the Russian merger clearance, then we have to say that the recent trends relates to the enhancing of control over the M&A transactions on the financial markets. Thus, new financial thresholds have been recently introduced for M&A transactions involving financial organizations, and the idea behind these thresholds is that if any major market player in the financial sector, for instance, bank or insurance company, acquires its competitor, the transaction will be controlled by the Russian competition authority, regardless of the amount of the assets of the company to be acquired. So any kind of concentration made by the major players on the financial markets will be controlled by the Russian competition authority. Finally, for the financial markets, we also have a special clearance to be provided by the Russian Central Bank. For instance, in relation to the banks and to the insurance company, transactions with the shares, with the assets of banks and insurance company are subject to special control and special clearance by the central bank. And here, the criteria for granting such clearance is mainly the financial position and the assessment of the financial position of the acquirer. And plus, this set of regulations provide for a separate code for the foreign participation in the overall financial market in Russia. And if we're talking about foreign investor acquiring shares in the Russian banks or insurance company, this specific approval for a quote in the foreign participation should also be obtained.
Okay, and on this slide and on the next slide, we will speak about situations how to proceed if a transaction triggers several types of clearance. Well, first we will start with, let's say, classic exit transactions that are subject to new clearance by the Russian Governmental Commission, and what to do if such a transaction is also subject to merger clearance in accordance with the Russian competition law and merger regulation, and also, for instance, if it is a financial company like an insurance company or a bank, if the clearance from the central bank is also required. And yes, the answer here is yes, such a transaction will be subject to the three clearances. And here it is important and interesting to note that validity of certain clearance decisions is limited in time. For instance, a merger clearance is valid for 1 year, starting from the date it was issued. And in the meantime, a regulatory clearance by the Governmental Commission may take longer in certain instances than 1 year. And as a result, and we used to work to handle a few transactions of the kind where the parties had to extend several times the clearances received, because by the moment of issuance of the clearance from the Government Commission, the merger clearance has elapsed, and also the clearance from the central bank as well. And finally, for completeness, we have to say that if a transaction is subject to the strategic clearance, and as Elena said, the Government Commission that reviews strategic clearances is a higher authority compared to the government subcommission dealing with exit transactions, then here strategic clearance is sufficient and replaces the clearance from the Government Commission. And in addition to that, there are high-profile transactions that are subject to approval by the President of the Russian Federation as a part of counter-sanctions regulations. First, it relates to companies listed in annexes to presidential decree adopted in 2022, and basically the companies caught are the largest companies active in oil and gas industry and also in the financial industry. So no transactions are possible with shares in such companies without approval by the Russian president. And in addition to that, this list was amended in 2024, and currently any transaction with a company which value exceeds 50 billion rubles also trigger clearance from the Russian president. We are talking here about the exit transactions. And if an exit transaction is subject to approval by the Russian president, and if it is approved, then it does not trigger merger clearance, and no clearance from the Russian Government Commission is required. So here it's clearly an overlap, and the clearance by the Russian president prevails. In the meantime, special clearance by the Russian Central Bank should still be obtained in relation to financial organizations. Well, now we will move to the next section, where we will briefly discuss about strategies adopted by foreign shareholders, foreign investors, in light of the complex regulatory landscape outlined above, and how they adapt to this situation. So basically, starting from 2022, foreign investors from unfriendly jurisdictions started to restructure their businesses or implement other measures aimed at ensuring compliance and possibility to continue the business. Here we do not speak about companies that decided to continue their business as is, and such examples are not so frequent. So here we focus on the most common structures and measures. If we are talking about reorganization of businesses, we can say that many companies have proceeded with transformation of their supply chain, and they started purchasing goods from neutral jurisdictions instead of unfriendly jurisdictions, since it facilitates the importation process, etc. Then a rebranding is also a popular option, frequently implemented. Certain companies decided to reduce their activities, but still continue providing certain services or selling certain goods, provided that such activity does not contravene measures implemented in their states of incorporation. I mean, sanctions adopted by foreign and friendly states. Then the next pillar is the reorganization of ownership. Apart from sale to third parties, when a foreign investor just exits from the market, MBO transactions are quite popular, and it makes sometimes possible for the investor to continue operating business, even if from a legal standpoint it is now owned by independent party, the management of the former Russian subsidiary. Sometimes investors preferred to introduce an intermediary group company as a direct shareholder of the Russian entity, and in this case, such an intermediary group company is registered in a neutral or friendly jurisdiction, such as, for instance, let's say China or United Arab Emirates or others. Another popular option is restructuring of the corporate governance structure, and Elena will discuss about that later. And of course, some other possible options, apart from the liquidation, which leads to exit from the market. These are making a company dormant. In this case, it basically stops all activities, and sometimes investors prefer to merge their several Russian subsidiaries into one company, just to reduce the footprint in our jurisdiction.
And in addition to what Maxim has just said, and overall to wrap up our part of the presentation, I would like to briefly comment on the option related to the changing of corporate governance structure of the Russian entity that would allow to somehow limit the scope of involvement of the foreign shareholders into the management processes in Russia. The idea here is that the charter of the Russian subsidiary is amended in order to limit the scope of competence of the shareholders to the minimum required under the law, meaning that there will be no much decisions to be made by the shareholders locally in Russia in relation to the management of the Russian company. Furthermore, from the practical perspective, most of the shareholders prefer to issue a power of attorney to the local representative based in Russia, who act as representative of the shareholders and takes all the decision related to the competence of the shareholder locally in Russia and sign all the resolution and minutes locally in Russia. To further control the activities of the local management, the board of directors may be introduced at the level of the Russian entity, which scope of competence may include the approval of certain sensitive and important transactions, and some transactions that may previously be subject to approval by the shareholders. And again, the board of directors may be composed of a local representative that will take all decisions locally in Russia, but formally report to the shareholders. Just based on our experience, we can say that this option is rather actively used in practice by those foreign groups that continue business operations in Russia via their Russian subsidiary, and as I understand, it may somehow help to reduce the risks imposed on such foreign groups by foreign sanctions regimes. However, for further input from the EU perspective, I would like to give the floor to our colleague, Dr. Thomas Heidemann, with whom we work very closely on a great number of projects involving both Russian counter-sanction regimes and EU sanction regimes.
Thank you, Elena. Thank you, Maxim. That was a wide flight over the Russian sanction systems. And I understand that I have about 10 minutes to introduce a little bit of details on the EU regulatory requirement. This will not go too much into detail. What I'm trying to do is to give you an overview of what is important in the EU and what you have to expect. So first, I just have to say the EU regulatory environment is really complex. On the one hand, you have the EU level, which means the EU regulations and decrees. On the other hand, you have in every EU member state, you have a national level, which implies the national regulations of the involved EU member states. You have always those two levels. And to add further complexity, you have the interpretation issue. So every member state is interpreting the EU regulations on its national level and sometimes different than other EU member states. That is the overall view on the EU's situation. And that means that for all M&A transactions in Russia, EU residents, so both legal entities and individuals, have to comply with the sanctions regulations, both on the EU and the national level. And it's not only EU residents, it is also their subsidiaries, even if those subsidiaries are not sitting in the EU member states. So it doesn't help to shift your business from an EU country to the subsidiary of this EU country outside the EU. It will still be subject to EU regulatory environment. Can I have the next slide, please? So what does it mean? We have a certain legal basis on the EU level, and that is in principle the regulation 833 from 2014, where the Russia sanctions are set forth. This was enacted in 2014 after the annexation of the Crimea, and has been amended numerous times since then. We have in principle three major directions where those sanctions are going to. First, it's personal sanctions against individuals and legal entities. Personal sanctions means a person is designed as sanctioned and is from that moment on out of business. No EU entity and no EU individual may do business with such person. Then another layer are the sanctions against products and services. Those are products and services which are listed in the different regulations in the EU. And this is something that is getting more and more complicated. And the third layer is sanctions against activities in certain regions, like Crimea, like the Donetsk region. For M&A transactions in Russia, this has the following impact. First, you cannot do any M&A transaction with a sanctioned person. A sanctioned person cannot be the party to the transaction and cannot be standing behind the transaction, so as an ultimate beneficial owner or something like that. So this will not work. You cannot do that. Secondly, you cannot do transactions leading to economic activities in sanctioned regions. You must avoid getting active in these designed regions. And third, no transactions with sanctions goods and services are allowed. This is firstly or directly, this means you cannot deliver such goods or services to Russia. This means but this means also that you cannot do M&A transactions leading to the transfer of such goods to Russia. And this applies to asset deals, and it applies also to share deals, although with certain exceptions. And what we see here is a certain internal conflict in the EU sanctions. On the one hand, the EU has an interest to have legal entities pulling out of Russia. This is one of the goals of the sanctions, certainly. On the other hand, there is the interest not to sell certain goods and services to Russia. So if the sale of an entity, of a Russian subsidiary, leads to the sale of certain sanctioned goods, that means that is the conflict, and this conflict is dealt with in different ways in different EU countries. For the practical impact, what does that mean? If we are going for an M&A transaction, it means first we have to do a certain due diligence on the parties involved in order to exclude the risk to deal with sanctioned persons. Then we have to exclude the regional issues. This is the easy part. It gets difficult when we are talking about goods and services, because that means that you have to put up a complete inventory of those goods on the target's balance sheet, and you have to apply with this inventory to the competent national body of the EU sanctions legislation. So here you have to go to the national authority, because at the EU level you do not have a central authority dealing with it. And here we come to a German specific of this all. In Germany, the competent authority holds that share deals do not need an approval. This is different from almost all EU countries, and this is different from the view of the EU Commission. But in Germany, you do not need this this approval. Can I have the next slide, please? That was the EU level. On the national level, you have the national regulations, which for Germany would mean that you have to deal with the so-called Außenwirtschaftsgesetz, the law on foreign economic activities, and with the antitrust law. This is similar to what Lena and Maxim just explained for Russia. This is a next layer that you have to deal with. The BAFA, the Bundesamt für Wirtschaft und Ausfuhrkontrolle, is the administrative body in charge in Germany. You have other authorities in other EU member countries. Yeah. Can we go forward? Yeah. And I want to finalize with some practical issues that we are typically dealing with. Yeah. It sounds very simple, but the exchange of original documents can be really a problem. Yeah. We do not have regular courier services directly to Russia anymore. This is not available. So that means that the alternative solutions that you can find them, these alternative solutions require much more time and are perhaps not always the most secure versions. When we are talking about the form of documents, usually apostille documents are sufficient, but that is not always the case. Yeah, there are certain administrative bodies in Russia and sometimes even banks that do not accept apostille documents, but they want to see a notarization by a Russian notary. And if you do not want to travel to Russia, and most clients don't want to, if you do not want to do that, you have to go to a Russian embassy and try to get a Russian notary active at the embassy to notarize your documents. This may be very time consuming, and this is simply difficult to coordinate. Yeah. We were already talking about payment issues. Just as a reminder, there are not so many foreign banks left in Russia which are actively dealing in cross-border money transfers. Russian banks are often under sanctions, and Western banks are hesitating to accept payments from Russia. So expect practical issues when it goes to payment. And the last point is what is unfortunately true in these topics. The legal environment is always changing. If we are talking about the EU sanctions, we have the 19th sanction package, which is active right now, which means that in the last 3 years, 19 times the rules have changed. So that is what makes life a little bit complicated, but that is what we are dealing with and what we are trying to manage when we do those transactions together. Thank you.
Thank you, Thomas, for your presentation, and congratulations. We have been able to comply with 1 hour time frame, and we have a bit time for Q&A. And I see that we have received a number of questions, so I suggest that we select some of them, or maybe all of them, depending on the complexity.
Well, we have 2 questions about the liquidation proceedings and whether the liquidation is subject to approval by the Governmental Commission. So the question is, what about the liquidation of the Russian company owned by shareholders from our friendly countries? Does it also require obtaining of a Governmental Commission approval? Well, yes, our position, which is based on the provisions of the counter-sanction regulations, is that liquidation of the company, voluntary liquidation of the company, is subject to approval by the Governmental Commission, because as a result of such liquidation, the rights of the unfriendly shareholders over the shares of the Russian entities are terminated, and this is the wording and the terminology that is used by the applicable counter-sanction regulations. We know that this approach prevails in practice. We know that the Russian notaries do not accept to certify the initiation of the liquidation process without the approval by the Governmental Commission, and we also know, and we have this experience when the tax authorities refused to register the beginning of the liquidation process without the approval of the Commission. So yeah, basically the answer to your question is yes.
Yeah, and furthermore, we have received several clearances, and our experience suggests that, surprisingly, but so far, no exit tax is levied and is prescribed by clearance decisions. So this is an ongoing practice, and we frequently, I think we have about 3-4 ongoing applications right now. They are being reviewed, and we have secured several such clearances. So yes, clearly the answer is yes.
Yeah, there is another issue related to the liquidation and to the transfer of the liquidation proceeds to the foreign shareholder as a result of the liquidation, because formally, according to the regulation, such a transfer is subject to the same restrictions as the payment of dividends, meaning that it is only possible to transfer 10 million rubles. Otherwise, you have to prove the approval by the Commission for any other transfer. But based on our experience, in case of liquidation, there are no chances to receive the approval by the Commission for the transfer of funds as a result
of
liquidation proceeds out of Russia, because there are no motivation for the Russian authorities to approve such transfer when the company is liquidated and the business is stopped.
Yes, they will just be frozen on C-type account,
Yeah.
and that's it.
Mm-hmm. We have another question related to the Type C account. Do the sellers of transactions submitted to the Type C account have to finalize the transactions? So as far as I understand, the question is the following. If the parties obtain the approval for the transaction, but subject to the payment to be made to the Type C account, whether the parties are obliged to complete the transactions. Well, from my perspective, formally from the regulatory side, there are no obligation to proceed with the closing if the conditions of the clearance are not satisfactory for the parties. But for the rest, I think we have to look at the transactional documents and how the consequences are formalized.
And from a practical perspective, if the parties have been able to secure a clearance decision, and if they decide that the clearance conditions imposed on them are not acceptable and do not proceed with the closing, then I don't know, finding another acquirer and filing a new application will have only very limited chances to succeed, and most likely will be rejected. We saw a number of transactions, and we know that, in fact, this trend has existed already for a couple of years, that the parties to the transaction are obliged to submit to the Commission a kind of signed letter of intent or preliminary SPA where they undertake to complete the transaction. So the case handlers and the authorities will be very unhappy if the transaction is approved but not completed. And this can have some, let's say, consequences for the future, especially if the foreign investor is keen to exit from the market.
Another question also relates to the payment of 10 million rubles. With respect to the clearance of funds in excess of 10 million rubles, who applies for clearance from the Commission or CBR? Is the foreign shareholder of the Russian bank or the Russian subsidiary? Based on our experience, we apply for such clearance, meaning for the payment of dividends in excess of 10 billion rubles on behalf of the Russian subsidiary, because formally this is the Russian subsidiary that asks for clearance to pay the amount, not the Type C account, but abroad. And the application is submitted to the Commission in the majority of cases when we're talking about the Russian subsidiaries active in general commercial markets, and the CBR is the competent authorities for the financial organizations such as banks or insurance company. They apply to CBR, and other entities, general commercial entities, apply to the Commission.
Any other questions?
One last question, I think. If the foreign entity has several C-type accounts, can the Russian entity refuse to pay to the account of the foreign entity's choice, claiming that it can only pay to the account that it has opened? Well, to be honest, let us get back to you after our webinar with the answer to this question, because as far as I remember, the idea of this C-type account was that the foreign creditor can only have a one C-type account, and the banks were supposed to exchange information about between themselves about the C-type accounts opened. But of course, in practice, it may work differently. But let us double check, and we will get back to you with the answer to this
and one more point. Usually, such C-type accounts are opened without involvement of the foreign entity by Russian debtors, Yeah. So I think this is all. We very much thank you for your time, and please do not hesitate to reach to us by email, and we will be happy to provide any additional clarifications. Thank you again.